Panic doesn't begin when the market crashes. It begins when the trader loses control of himself. That's the moment Jesse Livermore lived for and feared most, because he knew something few traders ever understand. The top isn't where you lose your money, it's where you lose your nerve. Every rally, every surge that feels unstoppable carries a hidden virus, euphoria. And in that euphoria, fear quietly takes root. Not the fear of losing, but the fear of missing. That's where the top is born. Not on the chart, not in the headlines, but in the human mind. Livermore used to say, the stock market never really changes. The pockets change, the suckers change, the stocks change, but human nature never changes. And that's why most traders panic at tops, because they think they're riding strength when they're actually riding emotion. I've seen it, you've seen it. The breakout that looks too clean, the volume too perfect. Everyone's bullish, everyone's confident. Every candle feels like proof that the move will never end. But deep down, something in your gut starts whispering, what if I'm late? What if this keeps going without me? That whisper becomes an itch. That itch becomes a buy. And that buy, that final chase, is where tops are made. Livermore understood this psychological chain better than anyone. He knew that when markets look strongest, traders are weakest, because confidence peaks right before clarity collapses. The market's greatest illusion is the feeling of safety in numbers. When everyone's on one side, the herd feels powerful, but the herd is never early. By the time it feels comfortable, the move is already over. Livermore said it plainly, the time to sell is when you can sell, not when you have to. He didn't wait for confirmation, he didn't need analysts or headlines. He watched behavior, his own and the crowd's. When he saw the emotional fever rising, that tightening in the collective heartbeat, he knew the end was near. This story isn't about calling tops, it's about recognizing when you've lost control of yourself. Because panic doesn't come from markets, it comes from attachment, the moment your opinion becomes your identity. And once you identify with a trade, you can't see it clearly anymore. Livermore made and lost millions by mastering one thing, the art of staying calm when everyone else was losing their minds. He wasn't immune to emotion, he just refused to act on it. Because the real skill isn't predicting the top, it's staying composed when it feels like one will never come. So let me ask you, when you're up big, when your screen glows green and your confidence burns hot, do you feel peace or pressure? Comment below, because that answer tells you whether you're in control or already on your way to panic. Next, we'll dive into the inner conflict, the paradox that traps every trader, why success makes you more emotional, not less, and why Livermore learned that calm is hardest to maintain at the peak of confidence. The higher the market climbs, the lower your control sinks. That's the paradox, the cruel, invisible irony of trading psychology. The moments that should make you feel powerful, profits, green candles, momentum, are often the same moments that make you fragile. Because confidence, when it's not grounded in discipline, becomes delusion. And delusion, in the market, is the seed of panic. Jesse Livermore understood this contradiction better than anyone. He had seen men make millions in the morning and lose their composure by the afternoon. He had watched calm professionals turn into gamblers, analysts turn into preachers, and traders turn into believers, believers in their own invincibility. He wrote, "There is nothing new in Wall Street. There can't be, because speculation is as old as the hills. Whatever happens in the stock market today has happened before and will happen again. That cycle, euphoria to panic, is human nature repeating itself, century after century. The inner conflict sits right in the middle. When the market rises, the trader's ego rises with it. And when the ego rises, discipline falls. At the very top, when prices soar, when everyone's confident, the trader feels most secure. But that's when he's standing closest to the edge. Because confidence isn't calm, it's the illusion of control, the mind's trick to avoid the discomfort of uncertainty. And in trading, uncertainty is all there is. Livermore watched it unfold countless times. He said that most traders confuse profit with intelligence. They think making money means they were right. But in truth, sometimes they just got lucky. And luck, when mistaken for skill, breeds emotional blindness. The inner conflict for traders isn't between fear and greed. it's between truth and comfort. The truth tells you to be objective, to follow your plan, to stick to your stops, to take your profits. But comfort tells you to hold a little longer, to believe it'll go higher, to think you're in control. And the higher it goes, the more that comfort turns into addiction. Livermore described it perfectly. He said, after a man makes money in the stock market, he feels that he knows something, that the market is now under an obligation to give him more. The moment he feels that way, he is lost. That's the paradox of success. The market rewards you, and that reward becomes poison. You start to feel safe. You stop managing risk. You start trusting your feeling more than your process. And just like that, the same confidence that built your profit becomes the trigger that destroys it. Livermore called it the trap of false security. He knew that the calm you feel at the top isn't real peace. It's emotional sedation, the kind that numbs your caution and blinds your reason. He often reminded himself, the market is designed to fool most of the people most of the time. And the cruelest trick it plays, making you feel calm right before it takes everything back. So, the real question isn't how to spot the top, it's how to spot the shift within yourself. That tiny flicker when confidence turns to arrogance, when belief turns to attachment. Because that's the moment panic is born, not when the market falls, but when your self-awareness does. So let me ask, when you're winning, truly winning, do you become more disciplined or more daring? Comment your truth below, because that reflection could save you from the moment when calm turns to chaos. Next, we'll go deeper into the psychological trap that makes traders ignore warning signs, dismiss risk, and ride euphoria straight into panic. And we'll uncover how Livermore trained his mind to spot that shift before it destroyed him. The most dangerous signal in trading isn't on the chart. It's the feeling that nothing can go wrong. That's the moment you stop being a trader and start being prey. Jesse Livermore called it the invisible trap, a mental snare that catches you not when you're losing, but when you're winning. It's the moment success blinds you to risk. The trap begins with reward. You enter a trade, it goes your way, you feel validated. You start to think, I knew it. Then it happens again, another winner. Now you think, I've figured it out. And after a few more, you're not just trading anymore, you're building an identity around being right. That's when emotion slips in wearing the mask of logic. And by the time you notice it, it's already too late. Livermore said, it isn't the thinking that does the damage, it's the inability to stop thinking that you're right. That's the core of the trap, the addiction to being correct. Because once your ego is attached to your accuracy, every tick against you feels like a personal attack. You stop reading the tape objectively. You start defending your opinion like a belief system. That's when panic begins to brew. Not the sudden, chaotic kind, but the slow, creeping panic that builds quietly in the background. The kind that whispers, what if you're wrong this time? And instead of acting rationally, you double down emotionally. You tell yourself, it'll come back. You hold because selling would mean admitting defeat, not to the market, but to your own image of competence. Livermore saw it destroy men on the street. He watched traders who once operated with precision devolve into gamblers chasing redemption. They stopped asking, what's the market doing? And started asking, why is it doing this to me? He understood something profound. Once your emotional state depends on price movement, you've surrendered your control. You've given the market the keys to your psychology. That's the real loss, not the capital, the clarity. Livermore's journals reveal that this trap nearly took him too. After one of his biggest bull market runs, he began to believe in his own invincibility. He ignored warning signs, signals he would have noticed months earlier. He said later, I got careless, I got lazy, I got confident. And in those three words, careless, lazy, confident, lies the anatomy of panic. Because panic doesn't start with fear, it starts with overconfidence. And when the illusion breaks, the fall is emotional, not financial. That's why Livermore began training himself like a soldier of psychology. He made detachment a routine. Every morning, before the tape started, he reminded himself, I am not the market, I am an observer of it. He practiced stepping back from his feelings, watching them like data. Fear, greed, excitement, doubt, all signals, nothing personal. He knew that the more he could label emotion, the less power it had. That's what most traders miss. They don't lack knowledge, they lack distance. They don't fail because they misread charts, they fail because they misread themselves. The market is a machine that magnifies human weakness. It amplifies greed when prices rise and fear when they fall. But it can only exploit you if you react to those amplifications. Livermore's genius wasn't prediction, it was perception. He knew when his emotions were louder than his logic. And that awareness, that simple, brutally honest awareness, was the difference between panic and patience. So ask yourself this: when your trade starts to go wrong, do you watch the market or do you start watching your P&L? Be honest, because that's where you'll find your emotional anchor or your blind spot. Comment below, when do you feel the most tension? When you lose money or when you start fearing you might? Next, we'll explore Livermore's philosophy, how he built a mindset so emotionally cold, so precise under pressure, that he could stand calm while others collapsed in panic. Calm isn't the absence of emotion, it's the mastery of it. That was Jesse Livermore's philosophy, not in theory, but in practice. To him, panic was never about price action, it was about mental action, what a trader allows to happen in his own head when pressure builds. Livermore didn't try to eliminate fear, he used it. He treated emotion as data, as valuable, measurable, and revealing. He once said, "A man must believe in himself and his judgment if he expects to make a living at this game, but he must not stubborn." To Livermore, that sentence held a secret code. Belief was strength, but detachment was wisdom. Confidence without humility was suicide. So he created rules to keep his emotions in check long before he ever placed a trade. He didn't fight panic in the moment, he prevented it. Let's break down his mental formula. 1. Observation before action. Livermore believed markets speak, not in words, but in waves. He didn't jump at every move, he listened to it. He called it waiting for the market to show its hand. He said, "It was never my thinking that made the big money for me, it was always my sitting." That sitting wasn't laziness, it was psychological insulation. By waiting, he gave his emotions time to cool before they could corrupt his logic. 2. Emotional awareness over prediction. Livermore understood that no amount of analysis could protect him from himself, so he monitored not just price, but state. If he felt too confident, he reduced position size. If he felt anxious, he didn't trade at all. He treated emotional balance as risk management. He wrote, "Markets are never wrong, opinions often are." So instead of defending his opinions, he observed his reactions. He learned to see excitement as danger, not opportunity. 3. Detachment from identity. Most traders trade to prove something: intelligence, status, control. Livermore traded to observe himself. He said, "There is nothing new on Wall Street because human nature never changes." That included his own. He studied his fear, his greed, his boredom, all as recurring market conditions within his own psychology. That's what made him calm under pressure. He didn't fight the storm, he mapped it. Livermore believed every trader has two selves: the operator, logical, patient, aware; the emotional self, impulsive, reactive, blind. When markets rose rapidly, he knew the emotional self would start whispering, "Add more, don't sell yet, this time is different." So Livermore trained the operator to listen but not obey. He didn't suppress the emotion, he analyzed it. If he felt greed, he didn't see it as excitement, he saw it as evidence of a top forming. If he felt fear, he asked himself, "Is the crowd feeling this too?" If the answer was yes, he often took the opposite side. That's how he stayed calm at market tops. He turned emotion into signal. 4. Routine as discipline. Livermore didn't rely on willpower, he relied on ritual. He reviewed his trades daily, not to admire wins, but to dissect behavior. He would note, was my timing based on facts or feelings? Was my exit disciplined or emotional? Did I act because I knew or because I felt? Each question was a blade, slicing away illusion. Over time, this habit hardened him. He stopped needing courage in crises because his process replaced panic. Livermore's calm wasn't mystical, it was mechanical. He understood that emotion is inevitable, but reaction is optional. And through repetition, he built that option into his system. That's why he could sell when everyone else was euphoric. That's why he could hold when others panicked. And that's why his name still echoes across time, not for his fortune, but for his discipline. He once said, "The big money is made by the man who sits tight." But what he really meant was, the big money is made by the man who can sit calm. So let me ask you, When the market heats up and the crowd screams for action, can you wait? Can you sit without needing to act? Comment below, because that ability defines whether you're following Livermore's law or repeating everyone else's mistakes. Next, we step into a real-world story, a moment when that calm was tested. A trader faces the same storm Livermore described and learns the brutal cost of losing control at the top. Every trader has that one trade, the one that teaches them who they really are. This is the story of one of them. Let's call him Daniel, a disciplined trader, or so he thought. He had rules, structure, even a quote from Livermore taped above his monitor. The market is designed to fool most of the people most of the time. He'd read Livermore's biography 3 times. He believed he understood emotional detachment, until the market, as it always does, put him to the test. It started like every dream run. Daniel spotted the setup early, a stock breaking out from consolidation backed by strong volume. He entered small, the way his plan dictated. It worked. The price moved fast, faster than he expected. He scaled in. Each green candle felt like validation. Each higher high whispered, "You're seeing the market clearly now." His confidence swelled. But Livermore once warned, the stock market will always seem easy after you've made money in it. And that's when danger begins. Because what feels like confidence is often just the first stage of emotional blindness. By the 4th day, Daniel was all in. He told himself it was logical, he was simply letting profits run. But deep down, he wasn't following a system anymore, he was chasing a feeling. And then, as it always happens, the first crack appeared. A red candle, then another, small at first, easily ignored. He remembered Livermore's line, "The time to sell is when you can sell, not when you have to." But Daniel didn't sell. He couldn't, because now the trade wasn't about money, it was about identity. He wasn't just holding a position, he was holding on to an image of being right. When the market opened lower the next morning, he didn't see warning signs. He saw opportunity. He added more. Buy the dip, he told himself. But he wasn't buying the dip, he was buying back his certainty. And then the top cracked. The same euphoria that once filled his room with confidence now flooded it with noise. Every tick down felt heavier, every minute slower. He kept refreshing the chart, watching green turn to red, watching profit turn to panic. That's when the quote above his monitor started to blur in his vision. The market is designed to fool most of the people. And in that moment, he realized he was most of the people. The panic wasn't about the loss, it was about the loss of illusion, the illusion of control. That's the real pain traders feel at tops. Not the numbers on the screen, but the collapse of ego underneath them. When Daniel finally sold, the room was quiet, the adrenaline gone, the glow from the monitors cold and still. He'd broken his rules, ignored his signals, and violated his discipline, all because of one emotion, the fear of missing out on more. He sat back and opened his journal, and for the first time, he didn't write about entry points or exits. He wrote about moments, the exact second he felt unstoppable, the moment his position size felt too comfortable, the flicker of denial when he saw the red candle and called it noise. He wasn't journaling his trades anymore, he was journaling his mind. Weeks later, after rebuilding his capital and clarity, Daniel said something I'll never forget. The day I learned to sell, not because I was scared, but because I was calm, that's when I became a trader. That's Livermore's lesson brought to life. Because the market doesn't test your knowledge, it tests your nervous system. And the moment you can stay calm while others are losing their heads, you step into the rarest class of traders, those who act, not react. So let me ask you, have you ever held a position longer than you should have, not because of logic, but because you wanted to be right? Comment below, because that moment, that single emotional decision, is where every trader either evolves or unravels. Next, we'll move into the emotional low point, where Livermore himself lost everything, and what that breakdown taught him and us about panic, control, and rebirth.